This is Pete Moore on Halo Talks NYC. I have the pleasure of being on location in Toronto, outside of Isabella. We are here with Jim Solomon, founder of Hone Fitness and a good friend of Pete Moore and Integrity Square for 20 years. Jim, welcome to the show.
Great to be with you, Pete.
Awesome. So you and I met back in the day when you were CEO of Crunch.
Correct.
And
98, I think.
I think I was a member because I was friends with Roger Harvey.
Yeah. Roger was head of operations.
He was my camp
then.
counselor back at Camp
Yeah.
Wakanda.
Yeah.
And then I joined the gym on 13th Street around the corner from the Zeckendorf Towers.
The real narrow and height, vertical and like 3-4 floors and vertical.
I think they were processing payroll out of there as well at the time.
I think
back
at
in
the
the
time.
day.
Then we moved to Union Square and all the offices.
And then you were at Converse, so you've been a brand guy for a long time.
I had been head of sales and marketing at Converse and had been in the athletic shoe business prior to coming in to run Crunch. Yeah.
So as they say, once you get into the health club industry, you never get out. So thanks for being another forward indicator of how life works.
I took a 3-year sabbatical in the motorcycle auction business in San Diego, but otherwise 98 to now, all but 3 years in the fitness business now.
Yeah, I'm going on 26 years and 4 months. As they say.
About the same, yeah.
You and I have seen a lot of different iterations of getting people healthy. And getting
you were
people
more
results.
Junior when you started.
Yeah,
I'm older than you.
Yeah, well, I started as a senior associate at Gold's,
right,
and then walked my way through the rest of the brands in the industry. Unfortunately, I'm part of like the cause of a lot of Gold's Gym rebrandings. But if you got to make a living, make a living somewhere.
Got to. That's a career. That's a career.
So you and I, met back when you were at Crunch. Obviously, that deal successfully got done with you with Bally.
Yep.
Then I was able to be helpful in getting that back out of Bally with our friends at Angelo Gordon.
Yep.
And you had moved on to work with Falcon Head, which for our listeners here was basically one of the first like Halo or health and sports funds.
Yeah.
So talk about how that happened.
You and I were talking about them because that was run by a guy named David Maross, who I had met. You know how small the financial world really is in New York. Is the owner of Crunch, Martin Franklin, knew David just through families and being European and whatever. And when we put Crunch up, we were talking originally to Club Med. And we were very far along with Club Med. I had gone to Paris and met with them. It was very far along. And then there was a crash. They crashed. Their Japanese business crashed and the stock tanked. And they went out at the 11th hour. And Martin was the one who kind of generated the interest from Lee Hillman. Do you remember that, Hank?
Yep.
And Lee was doggedly loving it. And we did it quickly right prior to 9/11. That was like, it closed right after 9/11. And Bally's took over back there. So that's the connection. But then to get to your thing, David at Falcon Head was a sports IMG related, going after that kind of stuff, which was Crunch, and looked at it. And then after we sold it to Bally's, I stayed in touch. And then I went with Falcon Head out of the business for a while.
So a little known history lesson for some of the people here is that David Maross used to have a fund that was called Chase Capital Partners.
Correct.
And that was under Chase and Chemical Bank at the time.
Correct.
And then kind of spun off to start Falcon Head.
That's right.
And a buddy who used to be in my business school class, Brian Crosby.
I worked with Brian. We never shared that.
Yeah, it was one of my section mates back at Harvard Business School back in the day. So when I had started Integrity Square, I was looking to try and solidify myself with some deals. So I'm like, hey, let me see if we can be helpful on Extreme. And I knew you through Crunch, and that's kind of how things kind of evolved.
Brian's a good guy. And he was with, what's his name? That famous financier for a while before Falcon Head. Carl Icahn.
Carl Icahn, yeah,
Famous.
Icahn Associates. I love that guy. I met that guy one time, which was
Brian's a good
classic,
man.
Classic meeting with a hedge fund operator.
Yes.
So as you kind of looked at Crunch originally back in the day, we're selling memberships, but you're also creating a brand.
Yeah.
When you moved up here and did the deal with Extreme. Yeah, Extreme was a very well-known brand in the downtown, the Toronto DTA, as they call it, right?
Yeah.
So talk about the growth there and talk about, your site selection back in the day.
Yeah. So I had learned a lot about the city of New York, which is where we made a lot of money at Crunch, right? We also had a gym in Chicago under the Hard Rock Cafe. We had San Francisco Tenderloin. We were mostly urban. So that's where I kind of got my feet wet on urban gyms.
Sure.
Extreme, when we bought it, was only 4, Pete, and they were suburban more or less. And that's, I had this comfort level with the city.
Which a lot of people don't have.
No, it's tricky. It's a puzzle. The cities these cities are puzzles, right? But again, weaving it to you is Bally's had some gyms here, and they were about to go bankrupt at that point. I approached the CFO of Bally's, and we bought 6, 7 Bally's, a couple in the city. And that's got me going quicker. Gotcha. It's much easier to buy than to go greenfield. And that sped us up because these PE guys, they want to, grow and sell.
Yeah. You mean they don't want to just wait for you to negotiate with landlords over multiple years to try and get a location?
That accelerated us well. And then that got me a little flavor. And then I added 2 greenfields. Think about it. I was there 6 years. I only got 2 in the city open in 6 years. So, but linking it all together, I became a good aficionado of the city of Toronto, like New York. I tried to do a lot of things I had learned at Crunch. And we then had 13 when we sold. You helped us sell it to Good Life, city and suburbs, right? A nice mix.
Well, there was I went to a management meeting with a company that I won't name, and they had their head of real estate stand up in front of this private equity fund. And the guy said, we can select clubs just based on the software. Our software is so good on site selection that we can just basically look at that. We don't even have to visit the site. We know how good it is. And I went up to the guy afterwards because he was somewhat of a friend of mine. I said, don't ever say that again because this shit is way more complicated. You're just looking at
don't say that to an operator.
Yeah, don't say that to an operator. You say it to a private equity guy who wants to lose money on the new site. Then they built a couple of sites in Dallas that had great traffic because it looked like it was on a highway, highway, but there's no exit. And there's an actual methadone clinic.
Right.
So when you look at sites and you look at what you've curated here with Hone and the pockets and the puzzle, I love this idea. I'm going to call it that now. It's a puzzle.
Yeah.
How much time how much knowledge do you have? How much time do you spend walking the neighborhood, understanding what's going on?
You just what you said to your buddy, you've got to live it, really literally live it. Yeah. And you got to walk. And you got to maybe have friends over the years. Like I have a girlfriend who lives right near one of the gyms I chose. I mean, these are neighborhoods. You and I talked about it. This is a neighborhood city here, right? So, we're in the gay village with the first one. We're in Koreatown. We're in Chinatown. We're in the Italian section of one of the gyms. We're in the Greek section on another gym. You got to do this by neighborhood. And then once you decide on the neighborhood, you got to do some of the things that are logical with the subway system, signage, space. Yeah. But you have to own a neighborhood when you're in a city, like Toronto,
And then when you take a look at a lot of companies that do big box rollouts or say like, hey, my club needs to look a certain way, and I need to get a exact number of square feet. I think back in the day with Crunch, I kind of learned as looking around and attending the clubs, like, dude, like these things may be all different shapes and sizes, and like if you want to get into a neighborhood, you have to like conform to what's available in that neighborhood. So talk about how you kind of lens that.
That's an important point over the years. I'd walk New York and I saw the planet, three planets in New York City. And they didn't look anything like a planet in Westchester County, right? And it's impossible. It's impossible. Also with the rents you need, you got to get a good rent. Immediately you're talking about needing basement space in a city like New York or Toronto. And then you don't want too much basement. You still need some sun, right? Yeah. So now you're combining the basement with some open area sun. And everything's back to the word of puzzle. There are no two buildings alike in New York City or Toronto, right? So there's no model other than, I would say the driving model's the neighborhood and the rent.
Yeah.
Right? The neighborhood and the rent.
So when you, to put your hat on of like, hey, I'm the CEO and founder and I'm working for a private equity fund, and you go to that private equity fund and say, hey, I'm going to bring you opportunities. None of these opportunities are going to look the same. And you're going to have to be comfortable or get comfortable that what we just talked about neighborhood, box, traffic flows, density, where things are going, what might be coming in a gentrifying neighborhood. You got to get comfortable with being uncomfortable.
Yeah. I was really lucky, Pete, because my group, Cornwall, is very small. And they're hedge fund too. So these guys are used to risk and maybe not modeling an opportunity. And I'll say it, part two is my first one worked.
Yeah.
Right. So
it's always a good thing.
Yeah. Success. I have a feeling they would have closed the tents if I hadn't done well. So the first one, which you've seen, was a big hit, and it was really close to Good Life's, right? Mm-hmm. So they gained confidence that I was stealing share, doing well. And I think I got them comfortable that model is only, brand, space, rent.
Yeah.
Yeah.
When you take a look at Bally back, 20 years ago, if you want to really like rewind the clocks, a lot of the Gold's Gym operators I used to work with would say like, I'm going as close as I can to a Bally because I know that they're a publicly traded company.
Right.
They unfortunately have too much debt, not the fault of any of the management team at the time.
Yeah.
They got too much debt. They got too much income, deferred CapEx. They got too high interest payments, and they just physically and financially cannot reinvest in the clubs.
Yeah.
Just can't do it.
Yeah.
So they were like a target for, knowing that the members were not getting taken care of.
Yeah.
When you take a look at a city like Toronto and you say, hey, I'm going to go across the street from a Good Life or somebody who's a legacy operator with a new product, you're definitely going to take some share from them. But you're also saying, like, I'm betting on the neighborhood. I'm not betting on just like a percentage of their members.
Completely right. First of all, here, Good Life is not Bally's, right? He's pretty well financed. He's got a nice brand. He's pretty strong. So within the comment of the neighborhood, it is a $3.2 million people city.
Yeah. It's the fourth largest city in North America.
Yeah, it's huge, and it's dense, and it's young. Yeah. So you can get that neighborhood. But I've learned you don't want to share too much. So, you need 1-2K in the city away from a Good Life to maximize, your business. You don't want to be a half a K away and share. Yeah.
So you started the Hone brand. Maybe just give some background on where that name came from, and then, how you've kind of grown it. And you and I just went through the city because I'm up here watching some sports games. Took the time to tour the locations.
Yeah.
You seem to have it pretty well kind of surrounded.
Yeah. I had the benefit of back to the extreme experience, right? So I knew which good extremes we had when we sold the Good Life. So again, what neighborhoods are good, right?
Sure.
And let's take a step back. Hone was to focus, hone in focus. Yep. Yeah. So that's just something I came up with. And I like short, simple names.
Yep.
So, but now back to the driving force is there are neighborhoods here that are better than others. They're younger. There's less high rise. I don't like a lot of high rise because these guys have put better and better gyms in their high rises. So I like these neighborhoods that are low high rise that don't have gyms or homes.
Gotcha.
And I like busy streets, just like 101 retail. But then you got to get the rent right. So now you're back to the basement and all this other stuff. But I had the roadmap from Extreme. So gotcha. I immediately looked at subway lines, very important. Young and Bloor have the two big subway lines. So you're going to do well if you're there, not too close to a good life, and then get the rent right. And then you choose a neighborhood. For instance, you haven't seen it, but I'm east in the Danforth, which is essentially the Bloor subway line, the Greek area, the Greek neighborhood. Mm-hmm. There is a good life there, but it was my second best Extreme. That good life is the one I sold them. Right. So I was going to that neighborhood as part of this.
Gotcha.
And I knew it would be good.
We are back with my good friend Jim Solomon, and we are talking everything related to the puzzle of Toronto, which is growing, dense, and very young. So, Jim, talk about the team that you put together here, because I met some of the people at the front desk and some of your operators, and it seemed like sometimes you say, oh, I got lucky with getting a good team, and it's like you realize it's not luck.
No, it isn't. But, we talked about it. Toronto, I would think is not only big, but it's growing faster than Chicago.
I see a lot of cranes here. That's usually a good sign.
Lot of construction. It's tightened a bit on immigration with what's happening in the world, but I think it was growing at a 10% clip every year, and a lot of these people are young, educated. They get in, because they're educated, looking for opportunity. I was able to capitalize on that. This all goes back 11 years where I opened that first one you saw, which is sort of the 50-yard line of Toronto, Yonge and Bloor. Yeah. And there's a language school right near me. And all these young kids, a lot of them from South America, Venezuela, actually, just come into town, college educated, looking for work, looking to make a life here after language school. We're working out at my gym, 20-somethings. And I just got to talking to them friendly, and then a couple of them seemed bright. They'd start at the front desk, then I'd open a second gym. I'd move that front desk guy and now I'm 100% young immigrants, right? Not born here. They're from Vietnam. They're from Venezuela. They're from a young lady you saw is from Colombia. Mm-hmm. They're all here to make a living and live a life that they weren't able to get where they're from. And I like I said, I think I'm 70, 80%. At least almost 100 on management and front desk. Maybe some of the trainers are indigenous here. And these kids, and I say kids because they're the age of my son Matthew, work like hell. Yep. They want to become general managers. They want to make money. Some of them are open to training people outside of their front desk hours. Some of the front desk kids, the managers sometimes train people. I try to get them, work because they want to work and they're industrious, and I find them to be fantastic employees. Yeah.
And then, from a standpoint of getting around the city and moving, employees or members using the different clubs, how does that kind of play out here?
Well, it's just like Crunch. I think 20-30% of the Crunch people did the all access 10 or 12 New York gyms. We have about the same, maybe 30% buy a membership where they can take a friend and use all 6. It's very easy to get around because I'm on the subway lines here. Right. The subway's by far the most efficient, but I'm also, if I'm not on the subway, Pete, I'm on a streetcar street. And I do the free guests. So there's a lot of back and forth to the 6 gyms.
When you kind of look at your business model, I think if someone was to say, what's the home business model? I say it's based on simplicity. It's based on, not trying to like put any additional fees or fine print in there. You've done that purposely.
I have.
You've done bi-weekly billing, which, a lot of people in the U.S. are starting to do now, which, gets a higher revenue per year, per member. But just give us a little background on your pricing strategy, the reason why you're at no fees, and how when you have no fees and you're not adding processing fees and you're not adding cancellation fees and things like that, how it might not necessarily impact your bottom line with like negative fee options. But at the same time, it's also, you might be able to hire better people. You might have less conflict at the front desk. Like, how does it like help the business?
Yeah, I think it's important. I like it simple. I've always liked it simple at Crunch, Extreme, and now Hone. I just think it's easier to sell. I had one membership for a number of years. Then I added the option of committing for a year. I never had that, even that. I just had quit anytime, and you get all 6 clubs, you get a free guest, here's my price. That's simple. Then I think I'm still simple, but I added maybe 5 years ago, commit for a year, and save some money. And that was a retention device, to be honest with you. And then a couple years ago, we had a lot of people coming back from the pandemic, and I was price sensitive because I'm above. I'm a value guy, Pete, but I'm above Planet Fitness type of pricing, right? And I was a little sensitive, so I introduced a 1 club, no guest. Okay, so I have 3 options. It's really the same membership, 2 memberships, either a guest or not a guest, right? And then 1 is a year commitment. So we keep it simple there. I want it to be simple to understand, as you said, simple to explain, simple on the website. I sell a ton of people because my customers are so young. They're very comfortable clicking and joining. I think I'm at 80-90% join online now.
That's huge.
Huge.
Is that credit card and ACH?
Credit and ACH.
How does it work up in Canada with
up
ACH?
Here, it's a little more complicated with the banks on ACH. You can sign them up, but you can't at headquarters tap it or do it. You cannot get that money unless they come to the gym. If they owe you money, it has to be done at the gym. At credit card, you can tap it a little later.
They're saying at the beginning of each month they have to authorize?
Oh, no. You can do the payroll. We use Twin Oaks. You can do that. Okay. But if it declines, you have a much more complication here. You cannot, the consumer has to take the lead on that if it declines.
So when you started the business up here, post-Extreme with all this knowledge, if I was to take Hone and put it in New York, this would basically be like the equivalent between like a Blink meets a Crunch? Would that be
I think exactly. I think if it's anything, it's Blink Manhattan, right? Where they're doing something a little different, Blink in Manhattan than they do in Queens or the Bronx, right? A little more expensive, right? So I'm pretty close to my spaces are a lot like Crunch, the wood and beam and the cool areas, brick and beam. But my offering is a lot like Blink Manhattan. Yeah.
And if you take, Blink obviously went through some hard times, mostly just related to debt. They had it on the balance sheet, and then they sold it to Pure Gym, which is coming into the U.S. market, and they're coming in pretty aggressively. The one thing that's interesting about the model that you set up originally was there's no Group X going on in there now. There's no kids club.
Space is too precious.
And it's also. But like 10 years ago, you kind of like put this model in the ground, and now like the market's come finally got to the point
I think it has. Well, back to what you said, you saw that one. I knew Planet. I knew from a marketing standpoint, I didn't want to be Planet, right? I mean, how am I going to sell? I can't be Planet, right? So when I did that first gym, I think I was ahead of the time. I think I got 8 squat racks in there.
Mm-hmm.
I had 2 areas of AstroTurf with the sleds and the ropes. And so I was going for the workout person, not the beginner, so to speak, where they, 11 years ago, they were advertising, we're for people that never belonged to a gym, right? Never have joined a gym. I went, okay, they'll own that. I'll go after Good Life, people who use the gym, and I'll be half their price, 11 years ago. And so I think I was early on the whole squat rack, dumbbells.
Yeah, it is very strength heavy, which is where the market is today, especially when kids are not like jonesing to get into like a Zumba class or a Group X class. They just I haven't been seeing that, nor are they dropping their kids off at the club. I mean, the fact that they had kids care for so long in the health club industry is a little bit ridiculous when you think about.
Well, there are no
you feel
kids.
like you're going into like a time.
There are no kids in the city.
I was in a club chain the other day. I'm not going to name who it was, but they. I'm like, what are you doing with this 3,000 square feet? They're like, oh, it's kids club. How many kids you got in here? Like, well, there's like 33 kids that pay like $35 a month. I'm like,
that's it.
It's like 1% of like your demographic.
The kids was easy to not do, but I'll tell you, the one you saw, there's a yoga studio across the street.
Right.
There's 7 Pilates studios within a half a K of me. I'm not going to outdo that, right?
We got to be the authority on something if you're going to be if you're going to open a standalone business.
So I got the strength for a great price.
Yeah, I agree with you. Yeah, if somebody said to you, I'm going to drop ship you into like the equivalent of like a new Toronto.
Yeah,
and he has like 12 million US. Go get me 6 locations like that with these rents.
That'd be fun.
Yeah, it would be fun. But how long would it take you to like deliver?
Oh my gosh, I'm telling you, with the landlords. Even in a place like Toronto, Pete, a lot of them want demolition clauses. I wasn't going to do that.
Yeah.
Right. I'm not doing huge money, but I'm doing enough money. I was going to let these guys have a demo. So it takes a lot longer to get a landlord who won't do a demo clause. Yeah. Right.
Just for our listeners, let's just pause and give them like what a landlord is doing is one, they're going to give you some money for tenant improvement dollars.
Correct.
And they're also going to try to basically manage their opportunity by saying, hey, look, I'll give you this money. I'll give you a 10-year lease. But if I get approved to put up 500 apartments here, I need a demolition clause that if I knock this place down, you got to leave.
Right.
And maybe I'll compensate you something, or maybe I'll compensate you nothing.
Right. But I put the money in too. And now they're demoing it, so I'm not going to sign that, right?
So for all you health club operators out there that are listening to this podcast, hopefully, one, you're understanding that real estate is a puzzle, and you got to invest the time and effort into figuring out where you want to be long term,
right?
But the second thing is like these lease agreements are extremely important because it's either an asset or a liability.
Correct.
That's it.
It's a big time asset. One other thing, weaving back earlier. Neighborhoods in Toronto, those are individual landlords. They're not doing a lot of TIP. So now I got to do the TI. Definitely no demo clause, but also takes a long time. This is not a big time strip mall where they got, we'll give you $30 a square foot, et cetera, et cetera.
There's no real estate investment groups out here.
These are individual guys that own a few buildings in the neighborhood. They're not going to spend. I got no TI on the first one.
So, as you think about going into other markets around here, obviously the urban slant to what you're doing is really what Hone's good at.
That's what we're good at.
Finding these new neighborhoods and then continuing down that path. Is there anything else? Like, are you looking at personal training as something that you maybe like want to spend some more time thinking about?
Yeah, that I think is a great opportunity. Being an individual operator, Jim Solomon, I think with 6 gyms, it's been a challenge for me in the PT, right? I think if you're a bigger group and you have a big legion of people and you got processes and you got people, back at Extreme, we had a real process with a lot of people doing the thing. It takes a big investment, takes some upfront money. I just wasn't willing to do that. Back to your simplicity thing. I didn't do separate people selling training or anything because I didn't want to add a lot of expense.
The one thing is that in Toronto, if we roll back to Extreme, there was a significant amount of revenue, like 30-40% was coming from PT.
30% of the business, and I think we did 80 mil, so that's a $25 million PT.
Divided by, that's almost like, it could be like 70, 80 grand per month per club.
Yeah, you make 40 margin, 30, 40, 35 margin on $25 million. That's a lot of money for a wall. Yeah.
So ideally, if you wanted to put that lever on and try that out again, that could be something that honed.
Big opportunity. Yeah. I just have learned over the 11 years, I'm personally keeping it simple because you got to really be devoted to personal training to get that kind of business.
And what's going on in the Toronto market before we close here on corporations? Like obviously there's people working from home, which from the neighborhood club probably benefits you because now people
living clubs are good. Near living clubs.
I like touring clubs now. The best part of my job is when I'm going around and I'm touring clubs, either whether I'm on assignment or whether I'm just going around. The clubs are usually full pretty much at all times. At least there's some people there. People show up at 5, like at 2 o'clock in the afternoon. There's like 100 people. And I'm are these people unemployed? I'm like, no, dude, they're just taking a work break.
They're taking it
from the house, right? That's what they're doing. But if you take a look at like the corporate market in Toronto, like obviously there's a lot of guys that are having returned to work. I think Ontario as a pension funds and like groups that have backing from the government are saying
they're coming back, just like New York. They're coming back. Those businesses, those gyms that are near in commercial areas have not come back as well as the living locations, but they are coming back. They are coming back, but not to the extent. I have one that's a little more commercial. It has not come back as well as the other 5.
Yeah.
Right.
Gotcha.
Yeah.
And then from a standpoint of, living in the city, the subway seems to be key. And I haven't been down there yet, but it seems like that's
it's a
main
clean, good subway. Yeah. There's 2 lines right now. They're building a third it would be a big change to the city. The one I mentioned to you, east-west, is Bloor Street. That's the street. East-west, big subway line used a lot. So if you're on Bloor as an operator, you have a good chance if you can get the right rent and the right stuff, you're going to do well because a lot of people are getting on that to the big vertical north-south one called Yonge Street, sort of like Broadway and our And so they're connecting. One of the gyms is really close to that T there, the one we're near right now. And that's Yonge Street. And again, you're good if you get the right deal on one of those 2 lines. The Yonge spokes north-south also, and that's good. I have a gym off that subway line. And then Eglinton is a street up north of Bloor, and there's a new subway line being built east-west like the Bloor one.
Gotcha.
And that's supposed to be done in the next year or 2. It's delayed, but that will change the city because now Eglinton will become like Bloor, right?
Yeah. So that's where the growth, next phase of growth comes in.
Yeah.
All right, man. Well, it's great to catch up with you. Thanks for the club tour yesterday.
A pleasure. Good seeing you up here.
Got a workout in at one of them, so it was good. I did some pec flies and caught a Ranger game loss against the Maple Leafs. But it was good to see you be in Toronto for a Maple Leaf and Blue Jay win on the same night. So
very good.
Good to see you.
Good to see you.
Keep going Halo, brother.
Thanks.
Good to see you.